I think this is the first time I've been on a tax panel with this many people here, so it's exciting. This is a very exciting time for the country. I heard that laugh. So what we have here is a very interesting panel on prognosticating about what's going to happen in taxes. And so what we have here is an interesting group of all NBA folks that all tax committee. I'm the former chair. Ryan's the current chair. Nell, I'm sure you are current chair.
No.
You started it.
I was the founder.
She was the founder of the tax group, and then Dave Shannon's in leadership will be the soon-to-be chair. So what this panel is going to talk about is, in large part, just taxing times and what's going to happen, we think, based on what we've seen over decades of tax policy. And I'll let everybody introduce themselves real quickly. Again, I'm David Hernandez, as Al said. I'm a shareholder in our Washington, D.C. office, and I'm the sub-chair of the Business Aviation and Regulation Practice Group. David?
I'm David Shannon. I'm a partner at Lewis Brisbois. We're the fifth largest law firm in the country. I think I run business aviation. And I've been blessed to grow up with a business aircraft, little Cessna 206 that my father used to travel around the country. And he always thought Bill Clinton was stealing all of our money, so I became a tax lawyer.
Perfect sense. I'm Nell Stubbs. I started off in business aviation at NBAA back in the late 80s. That's when personal use rules first came out in 1989. I went to Conklin and DeDecker, was an owner there. We sold to JSSI, was very proud to be part of the JSSI family, and now I'm an owner in Stubbs Aviation Advisors.
All right, and I'm Ryan DeMore. I'm the head of aviation tax at MySky. I'm, as Dave said, also the current chair of the NBAA Tax Committee. So yeah, I was actually a pilot for 10 years. So flew airplanes, and both for the airlines and for business aviation, and then hopped over to the finance and tax side. So just along for the ride.
Yeah, thank you, everyone. So our panel is taxing times. What, if anything, will change? Just the State of the Union. And I'm actually got the outline here. I'm not looking at TikTok or anything like that, or TikTok. So,
Oh, it's brutal.
yeah. So, see, TikTok, I don't even know what it is. So, I'm dated. So, how will the, my kids aren't on it. How will the election results impact the IRS audit? So that's our first one. So it's kind of interesting, and I'll just give you my take on that, and we'll go through and ask the questions. I think these audits are going to dry up pretty quickly, and I'll tell you why. As Christy mentioned, they're funded by the Inflation Reduction Act, and in fact, we're lawyers here, or I'm a lawyer, and we research this stuff. And so I read the press release a couple times over again, and one of the things in the press release, one of the statements, the number of audits related to the aircraft usage could increase in the future following initial results and as the IRS continues to hire additional examiners. I think the money to hire any additional examiners is going to dry up very quickly. And in large part, you just have to look at the news to see what the priorities are. I think the first priorities, in my mind, just based on the news, first priority is going to be probably the increasing the Tax Cuts and Jobs Act extensions. That's going to expire next year. And then, the next big one is going to be deportations. And there was a good article in the Wall Street Journal Saturday. So the deportations, according to the Wall Street Journal article, are going to be about $88 billion. That's with a B. And so all of our financial aid in fiscal year 2023 was about $67 billion. So that money is going to have to come from somewhere. And you can't have the Tax Cuts and Job Act extensions as well as the deportations in reconciliation. Just there's not enough money there. And also, let's throw in the SALT tax. You're going to have the SALT tax extension, and if any of the blue states, Republicans, want to get reelected, they're going to need to have some work on the SALT tax. So being in a blue state, I'm excited about the SALT tax coming back, but in any event. So I think there's very little chance that the audits will continue anytime soon. But David, your thoughts?
Move to Florida. We don't have any of that. I actually, well, to go back to the announcement on February 21st, here's what the plan was. The plan was the large business division had the funding to start about 4 dozen audits. From those audits, the information was going to be, they're using an AI, which should scare, the IRS is using AI, that should scare everybody. But what was going to happen from that, the new information was going to be used to create hundreds and hundreds of audits. For scale, to let everyone know, there are 30 people on the tax committee. Not everybody on the tax committee does audits, meaning there's like 9 of us. And for the 9 of us, you cannot have 9 people doing hundreds and hundreds of audits. That doesn't work. It's not a thing. So if the funding does decrease, that is going to be a major help for our industry, because the fact of the matter is most people are not prepared for the intense scrutiny that is happening in these new audits. To let everybody know, the new information document request that comes in is more detailed than it has been in the past. They are asking questions about different types of calculations that they have not asked for in the past. So will the audits continue? I don't know. If they're going to go for something, these are high dollar values. Most of the time they're looking for audits that are happening during COVID. I give the bonus depreciation speech oftentimes for NBAA. That's what they're going to go for. Whether you actually placed it in service during COVID, whether your flights are business or are they really commuting and they can be disallowed. There's a lot of easy money there, and most people do not have the records to support the deduction. Would that go away? Well, if they're going to audit something, these are big numbers. It would be nice, because our industry, I don't believe, is ready for that kind of onslaught. So optimistic, yeah. Bonus depreciation, I know.
That's the next topic, though.
Okay, all right, we'll leave that.
Now? No, go right ahead.
I think you about covered it, to be honest. Do you have anything?
Yeah, no, and I will say to sort of follow up to Dave's point there is those initial audits, right? That was kind of the, they're going to sort of, and these things don't take 2 weeks, right? I mean, they take a year to do, so.
It says on the audit it's going to take a year.
Essentially, they want to look at the results of those and have the analytics and be able to prove out that there's value behind the manpower that they're putting behind it. The problem is that manpower costs money, as Dave said, and as Christy had mentioned earlier, there's a lot of competing priorities right now. And so especially with the new administration coming in, like Dave said, there's, a lot of other things that are sort of going to be out there that are much higher on the priority list. So if you get through those 48 audits and the analytics don't prove out that this is a wise use of money, then they're not going to keep coming. So that's kind of my hope personally, is that, they've chosen the ones that, don't really have too much of an issue, and the analytics will prove out that they're better off spending their money somewhere else.
Yeah, I mean, and that's the thing. We none of us really know. We can talk about this, and we'll give you more advice after drinks. But wait a minute, we can't provide legal advice.
Yeah.
So we can give you what we think. I had a call last week with a client under audit, and and I said, look, are you kidding me? This is great. I'll give you three pieces of advice. 1, delay. 2, delay. 3, delay more. Because I really think this is going to dry up afterwards. Anything the former administration touched is now tainted with Ebola, and they're not going to, the new administration's not going to deal with it. So, I mean, that's the reality. I'm not a lobbyist. I mean, I don't know anything about the Hill or anything like that. I know where it is, but I don't get involved in that stuff. I just look at the facts from, years of doing this stuff with all you guys. And we sit around and we talk about this stuff, as crazy as that may sound. It's kind of fun. And so those are the things we talk about. And let's go to the next thing we talk about is depreciation. And I know there was a lot of questions in the next one. And I did research a little bit this. So bonus depreciation started what, right after 9/11? It was 30%.
2003.
Yeah, 30% bonus back then after 9/11. And everyone knows 9/11 was a very significant event. I think the OEMs are doing pretty well, and you can pepper Michael Malfitano and the other OEMs to see how things are going, but we're in a very different space now than 9/11.
Yeah.
And so the question of do we want, and it goes back to the priorities. And so, no, go ahead.
I have a question. The question is, looks like we traded out 1031 exchanges for bonus depreciation in
Right.
2017.
Absolutely.
Would we be better off with 1031s back again and just go back to our normal 5-year and 7-year makers depreciation schedules?
That's a good question. Well, what do you think about that, David?
I think it's better to have bonus depreciation. That's just me.
All right, that's one of our questions in our agenda, but Ryan?
No, I'm kind of torn on it. I mean, and I'll put it this way, from a bonus side, obviously, I think it is oftentimes misrepresented, much in this industry. I mean, eventually you have to sell the airplane, so you have to pay taxes on it when you sell it. And that's where Nell's point of, hey, do we bring 1031s back?
Exactly.
But again, even with a 1031, you're still reducing the next one, right? So
Until the last one.
until the very last one, and in
Which never
case-
happens.
Right, which never happens. So, I mean, the point there is pay me now, pay me later. It's a time value of money calculation that you can do. But, I would say, just from an optics and a value standpoint, I would say initially, if we want to spur the OEMs to have more production, then bonus is the way to go. I think if we want a slightly more sustainable, approach at it, I do think bringing 1031s back, but I'm more of an optimist and say, let's go get both.
I think 1031s will bring more buyers back.
Yeah.
We seem to be, the same people buying airplanes over and over and over again, and hard to get new ones in. But I'm not a broker, so I'm
Well,
not there.
and the other point there is one would have to assume that given the new administration that's incoming, one would think that corporate profits are probably going to increase a bit. And if you want to offset those corporate profits, obviously bonus is, a very easy way to take a big chunk out of those. So
Right.
I think that's important too.
Well, very quickly, and just yes or no question. Will 100% bonus depreciation return? Yes or no? David?
Yes.
No?
Probably. I'm not a big fan of bonus depreciation. I think it just encourages audits.
That's not, come on, that's not yes or no. All right, Ryan?
I think yes, and although I don't think it's airplane specific, right? It's obviously everything else, large
John
equipment.
Deere, right?
Yeah, exactly. So I think it's coming back? Yes, I do.
Yeah. I say no, and since Nell cheated, I'm going to go extra too. Because if they just renew the Tax Cuts and Jobs Act, it's going to be easy to renew it because they took it out then. And two, unless Jens and the OEMs can work some magic, it's going to be difficult to compete against the other priorities, which I think you're going to get more voters, I think, if you put salt back in than give bonus out. So I don't know, just something, or maybe not. Chrissy's shaking her. We don't know. So next year you can either think I'm an idiot or I was right.
We'll be back.
We'll be back, yeah. Here's one, I think we already touched upon this. Are there other tax law changes that we may see with the new administration? And Ryan, I'll start with you on that one.
Yeah, we sort of touched on the fuel taxes a bit, and I think, as Jens said, that hasn't been touched since the 90s. And, interestingly enough, and just a quick little backstory there, that most of your fuel taxes are actually going to the highway fund, actually. So they're not going into the air transportation fund. So, if you fill out a Model Q certificate as a Part 91 operator, you can get them over to aviation, but most people don't. So it actually ends up going into the highway fund. But that's, point is that I think fuel taxes is something that they wanted to push. I think the new administration is obviously not going to go down that road at all. So hopefully they don't touch those. And then secondly, there was a letter that was sent to Treasury about personal use. So SIFL rates, or standard industry fare level, which is the valuation of imputed income for flights. and sort of changing those. But I think there was a lot of sort of misunderstanding there as to why that was being sent, and that was very partisan. So
Very partisan,
I think it is definitely something that hopefully will not change, and they'll just get rid of those things.
Got it. No, anything new?
Well, the other one in the last administration was changing the depreciation schedule, that everybody was a 7-year makers as opposed to 5-year versus 7-year makers.
Yeah, that's a
So they
good
were
one,
looking
yeah.
at that. I just don't see any of these little things getting a whole lot of attention unless there's another driver, but I really don't see it right this year. I think it's something you keep an eye on because it's always like, oh, it was put out there, so it's out there. Somebody's heard it, so they'll bring it up again. But I just don't think it's
Yeah.
going to happen.
Okay, David? New taxes or new changes?
I think the CIFL level it may be looked at, but with the new administration, I think it's unlikely.
Yeah, I mean, the thing about all this stuff is it's so complex. I mean, again, we do, NBA, I should say, does 2 very comprehensive panels twice a year on all tax and regulatory stuff. And it's just complex. There's just a lot of nuance there. And we don't even think about the political aspects of it, or the horse trading involved. So saying with any high level of certainty what's going to change is, it's virtually impossible for us. But I will say, though, read what the priorities are. And right now, the priorities are pretty clear. At least they're shaping up, and that's where the focus is going to be. I'd love to see some more tax credits for eVTOL. I'd love to see that. That's going to be a game changer in the industry.
Yeah, and I'll add to that, and I think, you guys touched on the SAF credits for blenders. I would really like to see that jump the bridge over to the operators at this point in time. I know a few states have started enacting operators credits for, I know Illinois did, for SAF usage. They were the first ones. So it's nice that the blenders are getting it, but I think ultimately the people in the room that are buying it, the end product, could stand to have a little bit saved as well, which I think would help with, increasing demand.
I think that, too. I mean, if, depending on how much influence Elon Musk has on the industry. But, the United States is world leader in eVTOL right now. I mean, we have the opportunity to take this and run with this new technology. You've got Joby, you've got Archer, and you've got others out there that are doing a great job. If you went to NBAA, you saw Joby there, and it was a great signing event. So the regulations, and for the regulatory folks out there, I mean, it was an amazing time there. Although it's not tax, but it's something to at least be a huge catalyst to allow the United States to take a leading role in eVTOL. And so I'm optimistic that maybe 3 to 5 years, I'll be taking a Joby from Bethesda, Maryland to Dulles in 10 minutes, which normally takes about an hour. But those are the things that if we could shift maybe some tax policy changes to eVTOL and other things like that, that might be something that may happen.
Well, I don't think it's just this administration, but I did get a phone call, it's been 3 to 5 years ago, from the GAO that we did a deep dive on how aviation fuels were taxed. And we were looking at all the different ways it was taxed, and how are we going to tax the eVTOL? How are they going to be taxed? How are we going to get, how is the IRS going to get the money? How's the government going to get tax energy, battery power, or, whatever we're using, air power, but how are we going to tax it? So the GAO has been on it for at least 5 years, I would say.
Yeah, and I, personally, I think from a regulatory structure standpoint, I think what we have on the books right now, especially in the 135 world, for, commercial operations, is built for, obviously, was kind of airline-centric, molded down to business aviation. But if we really want to start getting into that right now, that framework needs to be set now. Right, is to say, hey, if we're going to be charging, if I'm going to whip out my phone and Uber my, eVTOL, what percentage am I paying? Are we just going to stick with 7.5%? Are we adding the $5 per head? How can we, as an industry, start setting and laying that groundwork now and getting that framework around those types of operations and those types of operators so that when they do actually start occurring, we're not trying to shoehorn taxation policy into, right, some new industry that we go, oh, well, I guess we'll just adapt these rules. And I think that needs to start happening now.
My only concern, and I shouldn't say a concern, it's just, so if you compare and contrast what's happened in the EV tool in the car industry, we don't tax cars we don't tax their electrical use per se. And so I say, let's just give EV tools a chance first. Let's just let them start flying, then we can worry about how to tax them.
Right.
Because,
how the
tax
government works.
attorneys aren't cheap, and if they have to hire an army of tax attorneys to figure out how they're going to avoid paying or minimizing the taxes, then,
I don't know, David. I think we need to be a little bit more proactive. Like, it's going to come. So you might as well be a little bit on, like, look at it and maybe understand what the GAO understands right now so that maybe we're a little just educated and we're not blindsided when it happens.
I'm just an optimist.
I will probably be, I'm going to be retired.
I just want EV tools to start happening pretty soon. Yeah, I mean, so,
And Dave, I would say that, as an optimist, I would say that there's probably technology platforms out there that are,
so let's go back to the.
working on such things.
Yeah, let's go back. We did skip this question. So going back to the audits, assuming that the audits don't go away, like pixie dust, what's the IRS looking for with respect, well, besides money, but what's the IRS looking for when you get audited? You get that call or a letter saying, hey, we're gonna look at you. David, why don't you just discuss that?
Yeah, so you will receive it's called an information document request, and on there, it's essentially they want everything. They want to know about all of your flights, who was on the flight, and what's different for all your business flights, you need to have the documentation. But what's interesting now is they actually want you to show how you come up with the calculations to support the deductions you've taken. And so we didn't really see all the time you have qualified business use 280F calculations being requested by the IRS. And you're getting that in this enhanced IDR now more than ever. And these audits haven't really are not from this large business division. This is kind of filtering out to a lot of current audits. This is not part of the 48 that are supposed to go out.
Okay, yep. No? Got it. Ryan, any thoughts on that, or is there software perhaps you could use?
I can think of a few people that have some, but, rather than shameless self-promotion. No, look, it is, these IDRs, historically, they just kind of were checking boxes. They're not checking boxes anymore. They really want to see what's actually there. And so.
It's funny, it seems like we now have people that can actually do math.
Yeah.
Within the IRS.
Right.
Because there have been years that we would go in and, it was simple math and they weren't
Absolutely.
getting it, so yeah.
And their understanding too has come up too, right? Like the disallowance calculations for the deduction it's a massive calculation, right? They let you calculate it 4 different ways, and it is extraordinarily complex. And what's involved is it's not easy. We'll put it that way.
Well, I also think we go back to the old adage of, they still don't think that we're paying our fair share.
Oh yeah, exactly.
And so they're coming after, they're making sure that they're getting every penny that they should be getting.
Yep.
And they're looking at it, and they're going, from what I understand, they go into so many different levels now. It's not just, we're auditing the personal use of the aircraft, because that actually leads to auditing of whether or not you took the proper depreciation schedule. Did you do that correctly?
Correct.
And so it's leading into other parts of the flight department, or what the airplane touches, the
Yeah.
aircraft touches.
And I think you guys all hit upon it. The IRS, at least the agents, I mean, they're learning, and they're getting good at it. And so, we used to, I shouldn't say joke, but we used to say that we know more than they do. I think at this point, they're up to speed. I'll email it to you if you want it. I have a 123-page IRS audit manual that was just published a couple weeks ago that goes through their their methodology, and it's, you know, the Cliff Notes. You got the answer sheet before the LSAT, law school admission test. And that's a big deal. And I gave it to one of my clients who's a tax partner at another firm, and he said, you know, what the hell is all this? I go, yeah, I mean, this is serious stuff that it's going to require a lot of thinking. And I'll just give you the hypothetical, the discussion we had. So 3 years ago, you said 2 or 3 years ago, just right after COVID, they went on a business trip and then stayed 2 days in Reno to golf. And the IRS guy said, well, you spent 2 days golf and then about 8 hours, less than 8 hours in a trip. I think this is primarily personal. And you know, we're not going to allow any of these deductions. And this is one of these IA and IA equipped audits. And so, you know, that's one of those things where I said, you know, delay, delay, delay. But once we start trying to figure out how to do this, that's the hard part of trying to go back 2 or 3 years. And so I said, look, what were the agenda? What's the agenda of items? Who were there? Why were they there? And each person, so you have to say, why was each person there? And so if, you know, you got a few people from corporate that just tagged along because they like golfing in Reno, that's kind of problematic. Yep. But, you know, to the extent that, you know, you or your clients have exposure, start asking those questions now. I'll send you the manual. We all got a copy. But it's important to start doing it now and being proactive.
Yeah, do your mock audits now. If everyone knows what the difficult flights are, you know, traveling back and forth to oftentimes destinations where personal entertainment activities occur. A lot of times in Florida, so during COVID, a lot of people came down here, and then there becomes a question of what's your tax home, and that's, with that, in the commuting, is how they're going to go after all of these audits. But, and I always tell everybody this, it doesn't matter if you get audited. It only matters if they find something, okay? So just because you get audited doesn't mean all of your flights that are suddenly personal entertainment vacation flights. So don't panic if you get it. The reality is the majority of the time we win, okay? We just need to make sure that you have documentation to support what you're doing. But, you know, if you do get audited, don't panic and think that automatically everything you did was, you know, vacation.
Yeah, and I will add to that, as far as having that documentation, please go check your corporate retention policies, or your customers' client or their retention policies for IT. The IT world over the last few years has really been shortening up retention. So, I mean, there are companies out there that have 1-year retention policies, and they do not keep backups. So go check and make sure that, you know, if the IRS can potentially go back up to 7 years. And so that's the one that I've recently had to deal with and have seen is, you know, going back and asking executive assistants for emails from 4 years ago, and the corporate IT department says, oh, yeah, well, we deleted those last month, and they're gone. So, you know, make sure that, like Dave said, do mock audits, figure out where you're keeping that data, and make sure you have a good system for going forward, right?
If you know, I mean, the IRS did us a favor. They announced that they were going to come out and do audits. I mean, they gave us fair warning that they were coming, and we all took it seriously. My advice to my clients is let's go back and review what you've been doing for the last 5 years. How have you been handling it? Can you answer all these questions? Did you follow what I put in writing that you need to do, and that this is a business flight and this is not a business flight? What are you doing? So go back and audit yourself.
Yeah.
And then plans change also. So a lot of times initial planning, things change subsequent years. So just because it started off with plan A, you know, what actually happened may be different. So we're looking at recapture stuff. So if we have this time, maximize this time.
Yeah, I think, again, not only did they tell us they were going to do the audits, they gave us the manual on how to do the audits and the specific questions to ask. And so you got the test right in front of you. Just read it. Yeah. I mean, literally, my client and I were like going through going, did they ask you this? Yeah, how'd you know that? I look like a genius, and I finally had to tell him. Steve, I'll send you the manual. And like, you're not billing me for this, are you? I go, not really. But, no, I mean, they gave us this stuff. And so, another question here, and this is kind of a catch-all question because this is the, taxing times and what if anything may change. So we have all these, bonus maybe, maybe not, like-timed exchanges, maybe, maybe not, SIFL, maybe, maybe not, all of these things. And I guess one of the questions we always see on the tax committee is, should an owner purchase or sell an aircraft based on the tax laws or based primarily on the tax laws? What are your thoughts?
No, you purchase aircraft for your flight mission. Taxes is just separate. Because what ends up happening is when you purchase the wrong aircraft, you end up selling the incorrect aircraft for the correct aircraft for your mission, normally within a couple of years.
It's like buying a house so you can write off the interest.
It doesn't
You
make
know,
sense.
you can't, you have to be able to afford it. And working with a client right now, and he's just can't believe it's going to cost him $1.5 million, $100 million a year to operate the airplane flying 400 hours a year. He can't believe it. He goes, that the fuel price is wrong.
Right.
Yeah, like
I
what?
went-
What are you talking about?
I said, well, I mean, okay, there could be a delta of 15 cents here on the price of the fuel, but it's still going to burn 350 gallons an hour. So there you go.
Right.
Yeah.
No, and again, as I, touched on earlier, especially with bonus, right? Like, at some point, you have to sell that airplane. So there's a time value of money play there, but you're not buying that airplane just simply for that benefit, right? So tax planning, is it important? Obviously. Does it need to be taken care of? You bet.
Yeah.
Is it the primary driver of purchasing an aircraft? If it is, you should not be buying an aircraft.
Correct.
Right. I think what's important is you got, just like everything else, you got to pre-plan. You got to ask the questions. And it's certainly an important aspect, particularly if you're in a situation where you buy something and you blew off sales and use tax and you took delivery in the wrong location, or you bought a plane thinking you're going to have bonus and you realize, hey, wait a minute, I'm doing a lot of personal use or international. You just have to plan. And so, anytime you talk about tax, the first sentence out of your mouth should be, let's do pre-planning and make sure the planning's there. Because just like everything with audits, anything like that, if you do the pre-planning, everything's going to be a breeze. I mean, 3 important questions you always ask when you do this type of stuff, particularly in the case of an audit or any type of investigation, government investigation. And I used to ask it when I was at the FAA as a prosecutor. You always ask, well, what do we know? What do they know? And what can we prove? Or what can they prove? And they may know a lot of stuff, but if they can't prove any of it, that's a great position to be in if you're on the right side. But if you're on the wrong side, that's when you need to settle, and settle quickly. And I think that's what's important about whatever happens in the next year or so with taxes, just be prepared and ask. You don't have to do it during sporting events or just, watching football. Just ask, well, what if this happens? And sit around your office and other, other areas and just ask maybe your tax professionals and other people, what if bonus does come back? Does that impact us? Should we buy a new plane? Is it time to think about it? Let's talk to the flight crew. If we do get changes to SIFL, and I've got my whoever's the first one up here afterwards, I'll give you my cheat sheets. This is all the knowledge that I got from, it's 3 things. The IRS press release, the Senate letter to the IRS, and another letter that the Senate letter used from a New York tax firm, consultancy group. And that basically covers everything. I mean, we don't get into SIFL and if they do tax law changes, but we all know, I mean, we talk amongst ourselves. SIFL's a nothing burger, frankly.
Yeah.
It's, we've already thought about it. We think checkers, chess, not checkers. And so we're already thinking 5 or 6 steps ahead when it comes to a lot of these things. And so SIFL's not really a big deal.
No.
It's not going to
It's-
revenue raiser.
No,
Yeah.
it's not material at all. And in fact, I've run a couple of different sets of numbers, and they all end with M's, not B's or T's at the end,
Yeah.
right? It's a couple $1 million that it brings in. So,
And-
you know,
Yeah. I mean, so SIFL, when you hear SIFL, don't be afraid of, oh my God, there's changes to SIFL.
No.
no.
Okay, We take more deductions.
Yeah.
If the SIFL's law change. Depreciation,
If we go to 5 to 7, is that a big deal?
yeah,
If we go from 5 to 7, is that a big deal on maker's depreciation?
Not if you have bonus.
yeah.
Yeah.
I have a client now with a maintenance issue that their plane's going to be grounded until the end of the year, and now they're thinking, I might not have bonus. Is the OEM going to reimburse me for that? I just laughed. Oh, no. That's not how it works. And so, but think about that, if bonus does change, think about how it impacts you. It shouldn't have a material impact, but for some people it may. So that's one thing to think about. What else? Bonus, like-kind exchanges.
Just in general, for this IRS push, I don't think they're going to find anything from Fortune 500 companies. There are teams of people that are actively trying to get all those calculations correct. So I don't think there's a lot there. Also, a bonus depreciation deduction for a Fortune 500 company doesn't mean anything.
Yeah.
So there's no incentive to try and manipulate any flights or anything of that nature. I worry about it's the people that don't have teams of people to go through this stuff. And most people don't have that and didn't realize at the time what level of documentation they were going to need in order to be audited.
Yeah.
And that's the kind of thing that it's like, I don't like that because a lot of people are pretty much defenseless.
I call them the do-it-yourselfers, and those are the ones that have probably the big exposure.
Right.
I mean, Fortune 500, if you're a corporate, you got a lot of resources, and you're smart enough to know that, why spend, worry about not getting the advice when your legal team and your accounting team is probably going to be 2 or 3x of what you're going to pay in taxes. So you're going to pay more in legal fees and taxes than you would trying to pay the taxes. I guess that's counterproductive in my financial interests, isn't it? But in any event, I mean, just plan ahead. So you're not going to you're not going to benefit by doing a do-it-yourselfer. So if you have some exposure, start thinking about how to plan ahead. And then let's see here. Do we see any changes? So any changes you foresee with the FET rate?
I'll answer that.
Yeah, go ahead.
Likely no, other than the nominal inflationary changes that come every year anyways. But the fuel tax would be the one that touches on FET, right? And so the interesting part there, the one thing that I'm a little worried about with that, as far as FET is, a lot of the commercial operators are actually floating the government a 17.5-cent loan when they're buying gas. They just don't realize it oftentimes. So if you fivefold increase that, you're giving the government more and more of a loan, which can get very interesting with different administrations. So that would be the only thing that kind of worries me a little bit, but I don't foresee any massive changes to excise tax.
And what's important there, and if you don't apply for that refund or rebate, then that money is stuck in is it the highway fund? It's stuck in the highway fund.
Correct. Right.
As Christie mentioned, and then I had an audit 2 years, and it was because of that. They go, why don't you get was it 3 cents?
Yeah.
Why don't you get your 3 cents back? You know how much my lawyer costs to look at these things? Or, how much time I spend for 3 cents?
That was actually, and funnily enough, the reason that 2.5 cents, 2.5 actually, the reason that exists is because of there was a senator that was worried that people were driving to airports and filling their trucks up with jet fuel. That's why it went up by 2.5 cents.
No, it's serious. Yeah.
No, that's how it happened.
Yeah. So, I mean, it's just right. That was a good year. All right. So FET audits, I mean, they got their hands full with this, the personal use.
It's not big
And that's
dollars
it.
there. Yeah.
That's it.
That's it. Al, we good?
All right.
All right. Thank you, everyone.
Thank you.
Thanks, everyone.